Alright, what's up? What's up? A lot of things going on. So, today I kind of want to go over why I think we've got morons that are they're labeled experts. We're experts. Really, honestly, this is a joke. This is a shit show of a joke. Alright, so I'm going to put myself in the corner. Something's going on with my camera or something. I don't even know. Anyhow, there's like a little like weird thing. I don't know. It might be. I'll have to check it out. And we're gonna do a display capture. Right. I'm gonna put myself in the corner in here. We're going to go over this really quick. So, the difference between stagflation and economic contraction. Why? For God fucking sakes, excuse my French, God. Sorry. Oh my gosh, I'm sorry. Please forgive me. Anywho, this was just, everybody's always talking about it.
Ultra, and now you can too, with the offer you just can't miss.
And there is a difference. We'll go over it.
With no trade-in required. Love it. What's not to love? Verizon is going Ultra, so you can get more.
Next guest says the FANG trade can still work. He's Tom Lee. He's FundStrat's head of research. Joins me here at Post 9, and we'll get to that in a minute.
That's Tom.
So they're going to come, Jim, and
Right here it
give
is.
a range of what they think the neutral rate is for the professor who's been on, even if we want to.
Or Professor Taylor's golf between the Taylor Fed runs something right. So these how it is true.
Not the least of which is that
The ages.
well, it's worrisome for a number of reasons, not the least of which is that I don't know what it says about asset values. When now we know in hindsight how much money was sloshing around, so I don't know how much air is still under a lot of it different assets. Take your pick. But you also think it will cause the Fed to raise rates quickly to try to head off a bout of stagflation, which is the worst.
A bout of stagflation. Holy fuck, I swear to God. Fucking morons. This is why we're in this fucking pickle. Because they don't even know the fucking difference. Definition of stagflation here. Persistent high inflation combined with high unemployment and stagnant demand. Okay. That's important, right? This is important to understand what this does. So inflation, we do have high inflation, and it is persistent, but we don't have high unemployment. And there is no stagnation of demand. So high inflation is met with, guess what? A stagnant demand, meaning there's no increase in demand or no decrease in demand. It's stagnant. It's like water. It sits there. That's what stagnant means. If I look up the word stagnant, right? If I look up this word, stagnant, a body of water or atmosphere of confined space having no current or flow. No flow. No up, no down. It sits. That is where stagflation comes in, because inflation's high and it's like literally halts everything to a still. That is stagflation. What we're experiencing is what we call economic contraction. An economic contraction is a decline in national output as measured by the gross domestic product. Right? That includes a drop in real personal income. And why is that happening? We're actually not getting a drop in personal income. We're getting an increase in personal income, but we're losing the value of that income because of inflation. Industrial products, once again, the industrial products are increasing, but we're getting diminishing returns because of the inflation and retail sales. Now that's what we're also seeing in the reports. Units of sales are actually declining as sales margins grow. Why? Due to the inflationary process. So let me get into this and go into it. Yeah. All right. I think it might be that light too over here that I used to whatever. All right. So, let me explain this. Very simplistic. Stagflation, right, is what we experienced in the 70s, right? The economy was becoming stagnant. It wasn't moving. We had high elevations of inflation with a very slow moving to nothing of economic growth in the 70s. Now, unfortunately, contraction, we have never experienced a lot of contractive moments where our economy was expanding and then it contracted rapidly. This is one of those moments. And I've said that prior to its onset because I knew where it would go, right, due to all the liquidity. When they put in the stimulus, I said this was hyperbolic. Why? Because we already had liquidity being involved into it, and this was going to literally, like, ignite it, right? It was going to boom, because you're keeping an economy open in which supplies are limited. That elevates inflation further, right? So demand is still there. We still have a lot of high demand, but now things are becoming unaffordable, right? So as profit margins increase, right, the amount that's actually being utilized is declining simultaneously. Those are contractive measures. It's not stagflation. Stagflation, there's ways to propel economic growth. In an economic contraction, the growth that's been onsetted by inflation becomes deflationary, eventually taking asset classes and devaluing them considerably. And this is why I have a huge problem with these experts, because they're fucking morons. That's why they are incapable of seeing what's coming. They did not. That's why I keep telling you all, I am an expert in this, because I studied pandemics and economic fallout. It's going to get bad. The feds can't do shit. Their back is against the wall. Okay, you have to understand that. They can't buy any stocks. They can't buy into the market to help propel it. Why? Because of their balance sheet. At this point, we have a deflation. We have a contractive economy. If they put in, then we're losing money. We just might as well give up on the whole idea of capitalism altogether. You know, you might as well just throw in the fucking towel and, like, you know, capitalism is illusion. We give up. We surrender. We surrender. It's not real. Okay? Here it is. Here, we'll throw in the towel right now. You might as well. Because that's what you would be doing. Right? Now, there's the thing about Russia wanting to back the ruble to gold. And a lot of people think this would be good, but actually you could exploit this scenario if they were to do it. So actually it would be funny if they did it, because you could put it in the right person's hands. It's like someone like me, I would wreck their ruble. And I would know how to do that. I'm not going to say that's nobody's business, but there's a reason why we got off the gold standard. It's limiting. It doesn't have any growth potential to the currency, right? And you have to, you know, keep currency moving to inflate assets to offset deficit. right? And gold's limitation has unfortunate side effects in this type of this world economy when it comes to exchange. So you have to understand that. Like a person like me could wreak havoc if I had the resources and Russia was to do something like that. I could literally wreak havoc. I promise you. That would be bad. I would love it. I would fucking... You give me some money and you let Russia do that, and yeah, game over. Fucking game over. It would be terrible. Actually, it would be kind of funny, but it would be really bad. Not for us, for them. They would be fucked. They would be totally fucked. They would never recover from that incident. It would be like really bad. It would be fucking hilarious as hell, though. But yeah, and I could do that. I would know how to do that, and there's a lot of reasons I know how to do that. I'm not gonna say, but yeah, you know. Anyways, yeah. So this is a joke. This is a shit show of a joke, man. This is a shit show of a joke. You know, what's going on. Now, by my estimations, you can't time down the crash. It's coming. It's coming. And, you know, then there's the thing about the loop. Maybe I should get into that. Well, maybe. Hold on. Alright, I guess I should go over this. Okay, I'll explain it, but I'm not going to tell you how to do it. Sound good? This one's like a little whatever. Alright. So, there was a thing I had a thesis on. Right, and it was literally oh no, oh shit, you know, I hate this. Somehow it got locked in together, you know. Ugh. Anyways, let me do this one first. It'll be just easier, and then we'll get me back up. Alright. So, algorithm loop. Okay, now this is a real thing. An algorithm loop over all the observations and updates the parameter by moving in the direction defined by negative Garnet. Easiest way to the algorithm loop consists in summary in firstly SA adding a random heat exchanger, but there's different ways. There's just different forms of algorithmic loops. And of course, Mr. Bandmeter, I don't know how he figured it out. I don't know how this dude figured it out. Volatile feedback loop is going to crash the markets. Okay. Yeah, that's plausible. Okay. Well, actually, it's a trigger. I'm not going to say. Anyways, you know, so my theory is more, you know, organic and not manipulative. So, I don't know. You know, I had a thesis. I was like, you know, we should have a trigger between, you know, this, you know, whatever. Alright. Don't ask me. No. God dang it. I'm telling you. See, there's like a weird... So it isn't... It could be just lighting. Looks like it's lighting from the light, actually. It's on this side. I don't know. It could be. Anywho. And then we come down here. Let me add a filter. And ta-da! It's not perfect though. Oh well, good enough. Alright, and then I can, you know, whatever, adjust this. Anyway, so yeah. Yeah, I don't know what to tell people, man. I really don't. You know, a lot of shit's going on. We'll get the feds. They're going to pump it up. Here's the thing. 0.50 basis points. It's not going to be enough. Inflation's going to trump that, right? I don't know if the feds will throw a curveball. I don't know. You know, but if they do, it wouldn't surprise me. They probably are like shitting themselves. If they try to go by 0.75, you know, they're trying to incrementally, you know, whatever. But if they don't beat the inflation levels, you know, it's going to keep accelerating, you know, and that's the problem. You know, you're trying to cut it off. You're trying to be, you know, we're behind the curve. That's what behind the curve means, right? We're trying to get ahead of it, but we're behind it. And it's impacting not just the American people's lives. It's impacting corporations' profit margins. It's one thing if you get all-time high revenues, right? But if you have declining profit margins due to the rate of inflation because of cost of living, well, then you're fucked because you have to offset that difference to keep employees working to make a profit, right? But those profits are dwindling. That's why capitalism is eventually fucked because of the law of diminishing marginal returns. Okay, it's a mathematical inevitability. It cannot be undone. At any point in which you have a linear form of percentage-based math, let's even take economics out of it. Anytime you have a linear form of progression, meaning it continues to scale, right, upward. You're investing increments, right, into a percentage-based conversion. At which point, right, the results begin to diminish, right? The rate of return, the rate of growth, all of these factors, the further you stretch those out and accelerate, it's going to return littler, less, and less, not littler. It's going to return less, and less until you are not gaining anything eventually. Congratulations. Now, there are ways around this. Why would I tell anybody? Why would I give a fuck? I don't give a fuck. I don't give a fuck. Look where I'm at. Do you think I give a fuck? I don't give a fuck. And they wouldn't want it anyways. Why? Because it would take their positioning out of play. And it would. And it's not socialism, okay? You know, I actually talked to a colleague about this. And, you know, but, you know, it's pointless. Anyways, regardless. Yeah, it's crazy. This is nuts. Look at what people are being told and look at what is evident. Slackers. Fucking slackers. I swear to God. Anyways, peace!